Six stocks I'm buying now, February 2024 edition. Welcome in, folks, to a beast of a video here today. I have 90 slides prepared for you guys. This is my favorite video I do each and every month for you, where I go over the stocks I'm buying now, why I'm very excited about these stocks, why I think they have huge upside potential, and my bullish thesis in regards to these stocks. So yeah, I started preparing this video late last night. I went all the way to like 2:20 a.m. I was still like preparing this video, and then I wasn't even close to being done. So all morning and afternoon, I've been preparing this video for you guys here today. So we have a lot to go through in this one. I hope you get a lot of value out of this one. I hope you guys appreciate it. I appreciate you joining me here today. Last month's video did 69,000 views, so quite a few views on that one. So we'll see if this one beats it or not over this next month. All I ask from you guys in return is smash that like button. Make sure you subscribe to the channel. That's it. That's it. That's it. That's it, okay? Yeah, we got a lot to go through in this beast here today. If you're somebody that has been throwing some money around in stocks and you don't really know what you're doing, you don't really understand income statements, balance sheets, cash flows, how to value stocks properly, if you're getting ripped off on a stock, if you're getting a great deal on a stock, all those sorts of subjects, my private group can help with that and take you up to a much higher level so you understand where you're putting your money and those sorts of things. That's pinned comment down there if you want to apply to join us in there. We've had an immense amount of people go through that over the years, and a ridiculous amount of folks reach six-figure club, meaning they got over $100,000 in stocks, or the seven-figure club, which means they have over now $1 million in their stock portfolio. So that's pinned comment down there, take you up to a much higher level than where you're at right now. All right, guys, let's start going through this. We got a lot to get through in this one, okay? First stock of these six stocks up here that I'm buying February 2024 is Wynn Resorts. Wynn Resorts. So Wynn Resorts, it's been a very tough 5-year span. And why has it been a very tough 5-year span? Well, Rona, right? Rona was devastating to all these sorts of travel-related companies, and especially to a company like Wynn Resorts, because they do an immense amount of business in Macau, okay? Which is a region that is, you know, very much to do with Chinese citizens being able to travel. And Chinese citizens weren't really able to travel for several years, or were very limited in what they could travel with. So a very tough 5-year span Wynn's had to deal with here, but they've made it through to the other side, and there's much brighter days ahead for Wynn Resorts, okay? This is an incredible opportunity here. So when it comes to Wynn Resorts, they own the 2 premier properties on the Las Vegas Strip, which obviously Las Vegas is a worldwide destination. This, by the way, also the city I live in, if you didn't know that. But, you know, obviously Las Vegas, you say Las Vegas pretty much almost anywhere in the world, and people already say, oh, Vegas, like, sounds fun. Like, you could say that just about anywhere, right? And so they have the 2 high-end properties. They attract big money. Not just big money United States citizens to come stay at the Wynn, party, have fun, and game, but also from all over the world. I was in the high-limit rooms at the Las Vegas properties just 2 weekends ago, and I can tell you, my gosh, you know, people playing, you know, Asian players, American players, you know, just stacks, $1,000, $5,000 chips. You know, it's just amazing what people will play with there. So that's our Las Vegas properties. They also operate the Boston Harbor property as well. They sold off the land in the building now, so they kind of like are in a leaseback situation for that. But they operate still inside that property. And then they own 2 very high-end properties at the older part of the Macau area, which is Wynn and Encore there. And then they own the gem of the gems, which is their very high-end property on the Cotai Strip called Wynn Palace that they opened several years ago. And this baby, you know, it was really starting to ramp up, and then we got hit with Rona, obviously. And so you haven't even got to see the best days of Wynn Palace yet. The best days of Wynn Palace are really coming over this next 10 to 15 year span now at this point in time. And I mean, just look at that baby. They have gondolas that go all across the water as you arrive. They have all this where it's set up for high-end shops and restaurants right here, and gaming as well. You look out to the fountain, and there's just incredible views of other properties. It's insane. Up here now, they throw these amazing pool parties. It's phenomenal, okay? Now, on top of that, they also own this piece of land, which is right across from Wynn and Encore, and they actually cleaned up this piece of land recently, and they're throwing a big Super Bowl party on this piece of land right now, where the tables are going for ridiculous sums of money. And you might say, man, how do they attract all these high-end people? They do it, okay? The properties, at the end of the day, when you're the premier out there, people recognize. They want to be associated with the best. They want to stay at the best. They want to game at the best. They want to eat at the best restaurants. And that's what Wynn can provide. Additionally, they're also started building a property in the Middle East. Now, this is still several years away from this property opening, but I can tell you the Middle East has been needing a high-end resort like this. There's so much money in the Middle East. It's ridiculous. Big money. And believe me, there's a lot of people that have been waiting for a high-end property to open over there. I can tell you that much. And so that's going to be very exciting. And from my understanding in regards to this, Wynn's going to get a management fee of this property. And I believe Wynn's only going to have to come up with around 40% of the money. And then they've got partners on that project as well. So that's just a massive opportunity. So this is Wynn Resorts, okay? Now, there's also a rumor. Okay, a big rumor in regards to something that's could be as big as anything in Wynn's history. The rumor, and this started about halfway through last year, that potentially there could be a Wynn Resorts that could be a centerpiece in the Hudson Yards area of the west side of Manhattan. Okay, we'll see about this. I don't want to get too excited about this, but I can tell you, if you put a Wynn Resorts in New York City, there's no more big money in the world than New York City. This would be bigger than anything Wynn could do. This is bigger than the Middle East opportunity. This is bigger than anything. If we could have a Wynn Resorts in New York City. And so I don't want to get too excited about that, but it's a rumor. And so their thought process is Wynn's waiting to develop this piece of land to see if they could do a project in New York City. Because if they can do a project in New York City, then Wynn would likely sell off this piece of land, which is incredibly valuable because you got not Scottsdale Fashion Square, you got the Fashion Show Mall right over here, which is the high-end mall on the Strip. Then behind this, you got the Trump property, and then you got Wynn and Encore right there, Resorts World on the left-hand side, and then Fontainebleau a little further down there. I mean, that piece of real estate is premier. It is worth so much money. And so Wynn, I think, is waiting to see if they can do this New York City property. If they can do this, then I think Wynn's probably going to sell this property off for big money to somebody that'd be looking to buy it. If they can't do the New York City property, then they'll probably, in my opinion, end up developing this into another tower here and connect it with some nice overpasses so you could get easily to the Encore and Wynn properties over here. And then, we can call it Wynn West or something like that. Now, it's very important you understand a little bit of the history around Wynn Resorts, because Wynn Resorts was started by a man named Steve Wynn. Now, Steve Wynn is a legend in Las Vegas. He started out, how he got his, he used to have a small business, okay, and then he was able to buy a sliver of land next to Caesar's Palace. This is back in like the 60s. And he bought this sliver of land from, who? Howard Hughes. And basically, he said to Caesar's Palace, he said, I'm going to open up, a little property next to you here. I'm going to steal away some of your business. And so he ended up selling that property to Caesar's Palace. They ended up buying it from him. And he was able to make a few $1 million of profit on that, which a few $1 million of profit back then, I mean, we're talking, this is like back in the 60s, was huge. And he was able to flip that money and take that into the Golden Nugget, which was a property that was kind of struggling. And he built the Golden Nugget up into a very successful property here in Las Vegas, okay? Then from there, he ended up building the Mirage through junk bonds. And the Mirage in the 80s, when he built that property, people thought this wouldn't be possible. He built this on junk bonds. They thought something like that with that much money, I believe he spent over $600 million, which was just an astronomical number that people couldn't even fathom building a resort with that much money back in the 80s. And he did it. And guess what? He attracted high-end players, not just from the United States, but a lot of Japanese players with a lot of money. And then he also built the Treasure Island. And then the granddaddy of them all, Bellagio, right? Which Bellagio, all these years later, that opened in 2000. All these years later, it's still a centerpiece property on the Las Vegas Strip, and one of the most famous property and resorts in the world. To be quite frank, the Bellagio, unbelievable, right? Then he got out of that business, sold it off, and then he started Wynn Resorts after that, okay? And so legendary businessman, what he was able to accomplish, I think he's one of the greatest businessmen we've ever seen in just understanding customers, understanding high-end, perfection, down to the smallest details, absolutely amazing. And if you really know great properties, you're going to go into the Wynn and Encore and just realize this is the best of the best. Like, everything is so perfectly designed. No expenses spared. He's the type that will spend whatever, because we want the person that has a $20 million net worth to say, this place is awesome. That's the trick, okay? Whereas a lot of other people are just like, no, let's do it the cheapest possible. Oh, let's save money there. Not Steve Wynn, okay? No, he has nothing to do with Wynn Resorts nowadays, okay? He's just the one that built this beautiful company here. And the reason is he started getting a little more involved in politics, and especially with T-Man, after T-Man got elected. And the problem is, after that, a lot of these skeletons that had been buried for a long time started coming out of the closet. Once you go political, your skeletons are going to start coming out of the closet. And so, you know, Steve Wynn did not like Obama, did not like the Obama administration, used to talk very negatively about them on conference calls and things like that all the time. And that was all fine and dandy. But once he actually started getting more and more politically involved, that's when the cards came crumbling down. And next thing you know, he was forced out of Wynn Resorts. He ended up selling all his shares and back in 2018, and that was it. That was it in regards to Steve Wynn. And so he has nothing to do with the company, but he did build an absolutely phenomenal company. Nowadays, the company is ran by this man, Craig Billings. He's the CEO of the company. And I got to say, I have seen no slacking in terms of Wynn's customer service levels, cleanliness, the product they're delivering to folks. I've seen no drop off. If anything, I potentially even seen maybe a little bit of an uptick, which is actually fascinating to see. And so Craig Billings has done a heck of a job so far. We'll see if he continues to do that job, but I've been very impressed with the job he's done with Wynn Resorts thus far, okay? Now, here's the deal. When it comes to Wynn, Macau's coming back very strong, folks. Very strong. These are the numbers you're seeing here. Gross gaming revenue out of Macau over the past year, and you can see it is just building and building and building. This is that, October is always like a freak month in Macau in general. Now, keep in mind, we have a long way to go to get Macau really back to rolling. And I think we're going to start to see some incredible numbers coming out here in 2024. But everything is right on the right track. And remember, Macau was basically closed from the beginning of 2020 through 2022, either closed 100% or at least partial closed. And so all these properties, like the Wynn properties, were all losing a fortune during that time period. And it was a really, really tough situation because you had to really stay open if you were allowed to be open, but they were honestly not making much. They were losing money. And so those days are long gone now. And now things are looking much brighter in Macau. There's a lot of high-end Chinese players that got a lot of money that love to go to Macau and love the game. And there's a lot of people that are first-generation money. When it comes to the gaming business, there's a lot of, first-generation money folks that, are successful businessmen in China that have made millions, tens of millions, hundreds of millions, or even billions of dollars, and they love to go to Macau and game. And, if you're going to go there, you're going to go to the Wynn Palace. That is the granddaddy of them all there, okay? Now, in terms of Vegas, Las Vegas is stronger than it's ever been. It's incredible. Third straight record year out of Las Vegas. And this is despite everything that's gone on over the years and inflation and bad consumer confidence and everything. And yet Vegas continues to put up beast year after record year after record year, right? And in terms of Vegas, like the product offering of Vegas is stronger than it's ever been. It's not just the old Vegas of like, hey, come, game, come stay at our hotels, come drink and party. Now you have so many massive events here. F1 race, the Super Bowl's in Vegas this year. The F1 deal, I believe, is a decade-long contract, and don't be surprised if they continue to re-up that decade after decade in the future. The Pro Bowl's been out here over the years. There's so many big concert festivals, several of them now at this point in time. Then you have all the convention business, the conference business. So Vegas overall is just starting to attract a year-round big customer base overall. And so, record year after record year keeps getting put up in Vegas despite everything that's going on. Bad stock market, good stock market, all those sorts of things, right? Now, looking at Wynn's numbers here, I think analysts could be way low in regards to their earnings per share they have for this company next year. They have $4.77 of EPS. 2023, was kind of a year of Macau ramping back up, right? 2024 is like now Macau's ramped and continue to build on that. And so I think the profitability that the Macau side of the business is going to start to throw off to the overall parent company of Wynn Resorts is going to be ridiculous. I think, you're going to see some of the strongest numbers ever in history out of 2024 out of the Macau side of the business, in my personal opinion. And so I think analysts are likely way low with their 477 projection there, right? Then in terms of Vegas, obviously it's going to be year 2 of F1, which will be coming again in, if I recall, they do that race in November, right? We got the Super Bowl here, which is going to be massive. Obviously, the numbers put up for Super Bowl is going to be insane. And then from what I've heard, the convention side of the business is booked up insanely strong for 2024 for Wynn Resorts. And that's a business they can see, at least 1 to 2 years in the future, because those big conventions, those big group business and things like that, companies booking, they are booked way into the future when it comes to that, okay? Now, also, revenue-wise, oh, it's almost funny. Oh boy, okay. So analysts have Wynn Resorts doing 8%, about 8.5% revenue growth for 2024. And I'm just looking at that number and just laughing because they're so far off. They're so far off, it's not even funny. In my opinion, Wynn Resorts is going to do minimum 15% revenue growth, but potentially 25% revenue growth in 2024. Okay, so analysts are a mile off here, and 14 analysts have numbers, and they're going to have to bring up their numbers very soon here, and I think they're going to have to keep bringing them up as we tick along in 2024, because I'm looking at that and I'm like, no, you guys, no, okay, way off in regards to that. That's Macau alone, never mind the Vegas numbers that are going to be pouring in here, baby, with the Super Bowl numbers that will hit in the first quarter. Then you got second year F1. Oh my gosh, way off, okay? Now, in terms of Wynn Resorts, right, they already made it through the worst. They've already made it through. Nothing can really scare you in regards to Wynn Resorts now at this point in time, because they already made it through the worst. The worst was your properties being shut down and then very limited in terms of how much business you can do. They've already made it through that. That's over, right? So in my opinion, for the next 5 to 10 years, it's going to be a fun ride. Even the next recession, whenever that happens, right, which we could debate when that's going to happen, even when that transpires, it's nothing. It's nothing for Wynn to go through compared to what they had to go through. Your properties are closed. You got to keep paying your employees with closed you'll take a recession any day of the week, because at least rich people still always got money. It doesn't, recession, no recession, rich people got money. If you got $50 million in the bank in a savings account, right, and savings and treasuries, and you got $50 million worth of real estate and $50 million worth of stocks, and you got your business and things like that, okay, recession, you're not doing as well, but you still got ridiculous amounts of money, and you're still going to live your life and go on vacations. It's a big difference between that and, you can't go there because literally you're not allowed to go there, right? Huge difference. So Wynn's got a lot of fun ahead for this next 5 to 10 years here overall. So Wynn Resorts, I like this stock a lot. Anytime it's under $100, it's like stealing money. Anytime it's under $150, it's still a good buy. When it starts to approach 200, it's usually a time to potentially sell and cash out some shares. But given what I see coming for this company over the coming years, I don't even know once it hits 200, I don't even know if I'm going to be that incentivized to get rid of it, because there's so much opportunity here over the next 5 to 10 years between the Middle East opportunity, potentially another property in Vegas or New York City or both, right? And Macau is just going to continue to build over these coming years. So really, really excited there, okay? All right, guys, next stock up here. Number 2 of these stocks that I am looking to buy in February 2024 is Nike. Nike. So as of right now, the shares are about $100 a share, okay? It's been a tough 5 years for Nike. It's been a kind of an up and down roller coaster ride. And from Nike, they really sell to the mass market, right? Whereas at Wynn Resorts, they're catering to wealthy. They're catering to the top 10% of net worth people. They're catering to the top 10% of income earners. A Nike needs to sell the middle class. That's how they put up their numbers, right? And in terms of middle class, they've been hurt quite substantially, right? We had the lowest consumer confidence ever in the history of the Michigan Consumer Confidence Survey came in 2022. We had a goods recession really started in 2022, led into 2023, and simultaneously a very weak Chinese mass market, right? And a consumer that had been hit by inflation very heavy. And so Nike's just had to deal with a lot with their particular customer base, okay? But that is what that is. Consumer confidence comes back. People's net worths get in a better place when it comes to middle class. Real wages, which is the most important metric when it comes to middle class, start ticking up again. All those things are coming together, right? Now, this is a great illustration here. This shows you the most valuable brands going into 2024 overall, right? And some of these brands don't surprise you. Apple, Microsoft, Google, Amazon, right? Those should come to your mind. Instagram, TikTok, Disney, Tesla, Samsung, all those brands. But one of the most valuable brands in the world is right there, Nike, right? One of the most valuable brands in the entire world. And it's a type of brand that when you see the swoosh, right, you could be in many places in the world. And there's at least a couple billion people on this planet that if I showed them that swoosh, they know what that is. Like, that's Nike. They see that swoosh, they know immediately. And that's very few companies that you could show that to. And 1 billion, 2 billion, 3 billion people would be like, that's Nike. That's a brand. They would like, I know that brand, right? I think about Apple. I think there's, a couple billion people on this planet that know that. Or Facebook, I think about that, right? McDonald's, I think is another, you see the golden arches, oh, I know McDonald's, right? And Nike's one of those brands. And when you think about the brand, it's not just that you know it and it's super famous. It's that your brain recognizes it as success, as greatness, right? It's something so different than just a clothing brand, a shoe company, somebody that makes hoodies and sweatpants and things like that, right? You think of Michael Jordan hitting game-winning shots and winning championships, right? You think of LeBron James jumping through the air, doing a crazy slam dunk. You think about Tiger Woods dominating golf for, a 20-year span there, right? Just unbelievable and, captivated a very high-end audience that was just fascinated with how could that man be that great at golf and his success, right? You think about Cristiano Ronaldo and how great of a soccer player he is. And obviously, I think he's the second most followed person in the world, right? I believe. You think about him, right? You think about Lance Armstrong and the way he dominated cycling. And so Nike can even get into these verticals where even more niche audience, right? It's not as general, right? You think about when a track star at the Olympics, right? When everybody's watching, setting a new world record, and all over their jersey is Nike, 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 right? And they've even gotten into music with somebody like a Drake, right? And you see him at his concerts, you're having a good time, you're associating that success with Nike. I think it's one of the best branding stories in the history of branding, right? And you can listen to experts that really know their stuff around branding. And what's one of the most brands they have the most respect for? Listen to the way Steve Jobs spoke about Nike. And you'll really start to realize how powerful that brand is when you got somebody like a Steve Jobs respects you and is like, they got it. They're really doing it like that. Whew, you're at another level when you're at those sorts of people, respecting you, right? And the thing about Nike that makes them so valuable, in my opinion, it's not just about how much cash flow you make and how much net income and those sorts of things. And those are very important. We'll go through that in just a moment. But you can't build another Nike. It can't be done. You don't have the bankroll Nike has. You never will have the bankroll Nike has. You don't have the discipline Nike has or the connections. This is why so many brands have been built over the past 40, 50 years, but can never become a Nike. And they're just another brand selling you shoes and selling you shirts and stuff like that. Nike has the biggest bankroll. They have the most discipline to then go reinvest that money, all the money they're making, back into the best athletes in the world, which then becomes this kind of self-fulfilling prophecy of then more sales, more revenue, because the brand's getting even more famous, even more well-recognized by the best athletes in the world. Most companies aren't willing to do that. At some point in time, they say, let's take more money out of this business. We don't need to spend on these athletes. We don't need to spend on this person or that person. Nike says, no, we do. We're going to do that. We're going to spend that, right? And they have an in with every sports league in the world. And so you can watch a college football game and you see an Air Jordan on all the players' jerseys or a Nike sign on all these different players' jerseys. It's amazing, right? And so you can't duplicate that. It's just not possible. You can't duplicate that, right? Now, Phil Knight, he stepped down from the company. He is the one that built this company. He stepped down as CEO about 20 years ago, actually, now at this point in time. And despite him stepping down from the CEO role 20 years ago, this company's obviously done phenomenal and just become a bigger and bigger beast. But obviously, he set a precedent of just an amazing company in Nike in terms of really understanding reinvesting the money you're making back into the next great athlete and the next great athlete and the next great athlete. And just on another level, right? Now, when we look at Nike's income statement, we see something very good and something very troubling, okay? Here's the deal. The company's revenue has increased by over roughly $17 billion between May 2017 and May 2023 in terms of their revenue side, right? Phenomenal, great. Gross profit went from $15.3 billion to, about $22.3 billion. So about $7 billion up. So revenue and gross profit looks great for this company. They've been doing phenomenal over the past few years. But we have a problem here, okay? Check this out. Now we're going to profitability side. Look at the operating income. Went from $4.7 billion to $5.9. Now that's still good, right? But it's only $1.2 billion good, right? Which means that's telling me we've got a spending problem here with Nike, right? Look at selling general and administrative expenses. Went from $10 billion to over $16 billion. Nike has a spending problem. They've overhired, they're overspending at this point in time, okay? They're doing too much. Now, very recently, Nike made a big announcement that came out, and it came out in December when a lot of people aren't really paying attention to the market and stocks and what's going on there. But Nike announced they're going to do big layoffs, and they're going to cut about $2 billion in expenses over the next couple of years. And I can tell you a lot of that's probably coming in the next quarter or two in terms of the big expense cut there. There's a move they have to make, and it's going to increase profitability immensely for the company. If you look at somebody like a Meta, right? It's fascinating what Meta's been able to do. They did the big employee cuts, right? Started in 2022 and obviously got executed in 2023. And yet they were able to accelerate their revenue growth substantially, able to drop their expenses. And look what happened to income from operations. It skyrocketed 156% up. I mean, that's unbelievable, right? Net income up 201%. I mean, it's a night and day difference when you can start accelerating your revenue because, you're not as bureaucratic and those sorts of things, and you can drop your expenses. Your net income flies to the moon. Your earnings per share, right? Your income from operations. And so that's what I foresee happening here with Nike. Now, here's the other deal. I think analysts are actually too high with expectations for this year's EPS. And the reason being is they're going to take Nike's going to have to take some big restructuring costs and expenses in the next quarter or two. So that's going to kind of hurt them. But I think they're way too low in terms of analyst expectations for next year because their fiscal year ends in May of each year, okay? So I believe analysts are way too low with their estimates for next year because I think Nike's operating income and their net income is going to fly. I mean, absolutely fly in the fiscal year that's going to start in May, okay? So, nonetheless, I think analysts are way too low, and we're going to have a real profitability story emerge for Nike overall, okay? Now, as far as the balance sheet goes, pretty good balance sheet in regards to Nike, right? Total equity has went from $9 billion back in 2019 to last report. It was over $14 billion in total equity, stockholder equity. The company's also sitting on nearly $10 billion of cash and investments. Whoo-wee! Oh yeah, baby, looking good. On top of that, look at the dividend growth over the years, right? And despite Nike having struggles and, having to deal with different situations, right? Look at the growth in the dividend over the time, right? They've had 11 consecutive years of dividend growth. Not many companies can say that. On top of that, 34 consecutive years of paying dividend payments. And think about the recessions the companies had to go through and all the different turmoil and this and that and this and that, right? And yet 34 consecutive years of paying dividends. It's amazing, right? So when I buy Nike shares, I'm collecting dividends, right? But whatever I collect in dividends, is probably a very low amount compared to what I'll be collecting in dividends from Nike, let's say 3 years from now, or 5 years from now, or 10 years from now, right? Because they're going to likely, as their profitability goes up and up over years, they're going to increase their dividend more and more and more, right? So that's a fascinating thing with a dividend grower like Nike. And the last thing I'll say about Nike here, it's a sleep well at night stock. There are certain stocks in the market, right, that you can buy those stocks and you can hold those stocks for years and years and years. And you don't have to stress about them. You know they're going to come through with their numbers. You know they're going to grow their businesses. You know if they have to make any adjustments, those adjustments are going to be made. You know they have the best of best executives, the best board of directors. That's a Nike. I don't have to worry about it. I buy shares, very undervalued. I add to those shares and add to those shares, and I can sleep well at night. There's a lot of other stocks in the market that, man, you feel like, I'm taking a big risk with this one. Things could go wrong. Not a Nike. Nike's very easy, a stock to own, to hold for years and years, and add to shares, even as the shares go up over the years, okay? So I love Nike overall. It's, phenomenal opportunity here, and I look forward to hopefully buying a lot of shares, not just in February 2024, but in, the coming years, okay? All right, guys, so let's get into the third stock, these 6 stocks. Looking to buy in February 2024, and it is. This one should not surprise anybody. You had to know. If you're a loyal watcher of my channel, you knew this one was going to be on the list, okay? PayPal. One of the most attractive risk rewards in the stock market, in my personal opinion right now. I think it's the most attractive, actually, I will say, risk reward profile. It's priced for failure in terms of valuation of this company, right? And, fintech went through a big bubble. The bubble popped. These stocks have now bottomed, and there's much brighter days ahead. Everybody should know PayPal. They own PayPal. They own Venmo. 2 of the super popular services you can ever imagine out there in kind of the fintech related space, PayPal and Venmo. They're basically like verbs. Can you PayPal me? Can you Venmo me? Very, very popular overall, okay? Now, here's the deal, okay? PayPal's not everybody likes to try to make this one out to be such a super complicated story. It's not that complicated. It's an easy risk reward profile here, okay? The bottom line is analysts are far too low with their earnings per share estimates for the stock. The stock's trading way too cheap. It's trading about 11 times 2024 estimates. Come on, man. Considering the growth rates, and keep in mind, these might be modest growth rates. Analysts have them grown 8% in 2024 revenues and another 8% next year in 2025, right? I mean, guys, for a company that's grown 8%, if you can get a revenue growth story at 8% where they're growing their bottom line at even a faster clip, and you can get it at a 10 forward P or 11 forward P, that's very undervalued. Extremely undervalued. When you're talking about these sorts of valuations, you would expect to be in a stock that has no revenue growth and is potentially even have revenue declines. And that's not PayPal. That's just not factual, right? Now, there's a call option on PayPal as well. And the call option is Alex Chriss, the new CEO who's come in this company in the past few months. And he's a whole wild card in this situation. Because Dan Schulman, the man that was leading PayPal before, he was a good executive, but he wasn't a very exciting growth executive. He wasn't a super innovator. Now, they brought in Alex Chriss from Intuit, who was about to enter the prime of his business career. And Intuit's been one of the most loved stocks by the stock market over the past 10, 20 years. And this man was one of the most important people at Intuit to really build that into one of the most loved stocks and business models, one of the greatest business models in the world. And so he's a wild card in regards to the situation. There's nothing but upside potential in regards to Alex Chriss. There's really no downside potential here, okay? He did his big show-off day 10 days ago. I was very impressed by that overall, talking about PayPal's innovations, all the things they're going to be rolling out this year. I'm very excited about all those opportunities. Some of those, I'm like, man, if that hits, that's a whole game change for PayPal. Some of those, I'm like, it seems like a very easy execution for PayPal to execute here. So he's a call option on the stock, okay? Now, also, in regards to PayPal, it looks like they're going to do a big layoff, about 9% of their workforce. Some workers at PayPal will need to look somewhere else for a new paycheck. The company on Tuesday basically announced, but they didn't really announce, and we'll talk about that in just a minute, it's laying off 9% of its staff. In a letter to employees, PayPal CEO said the tech company needs to be more efficient, use automation, and consolidate our technology. 100%. PayPal is way overhired. They know that. Wall Street knows that. Wall Street refuses to buy the stock until they do these layoffs, essentially. It's about as simple as that, okay? But the weird thing in regards to this, there was no big announcement around the layoff. I couldn't find anything on the investor relations page about it. So it's kind of like a little bit on the D-low. My thinking is they're waiting to announce this big layoff for this week, okay? And that announcement's likely coming here in regards to they'll release an earnings and things like that, and then likely talk about the layoff, how big it is, and how much that's going to help the business profitability-wise. And so in regards to PayPal, right, I look at the second half of 2023 through the first half of 2024 as grab as many shares as possible. I think this is extremely low risk, extremely high reward, in my personal opinion, in regards to PayPal overall. And the way I kind of see it is very similar to the Meta setup, right, which now I'm sitting on a $641,000 gain on Meta stock, right? The gains from Meta really started to pour in, and the stock really bottomed out for real, after the big layoff was announced. They did the big layoff announcement, and, very shortly after that, Meta started to fly very shortly after that. And so I think there's a high probability that PayPal will make their announcement, and then very shortly after that, the stock's going to start to roll rapidly up to the upward side like Meta did overall, because people are going to realize, oh my gosh, the profitability is about to skyrocket in regards to PayPal overall, right? Now, if we look at the last report when it comes to balance sheet, $11.5 billion in cash and short-term investments on this company. So their balance sheet's in a very good place. Simultaneously, they're bringing down their share count substantially. PayPal used to be a company where it seemed like they kept diluting shareholder value, and a lot of people didn't like that. This story's changed now. They're doing big share buybacks. They're bringing down the share count immensely. So the way to think about this is basically for every dollar of profit the company starts making, you as a shareholder, you're going to be getting more of that profit because they're taking so many shares off the market, which is very good news overall, okay? So the PayPal recap here is we have a company that's revenues are going up very nicely, and if Alex Chris executes, we could be in a situation where that revenue starts to go up much more rapidly. Net income's growing at a faster clip than revenue. That's great news. I love to see a situation where net income is starting to grow faster than revenue and earnings per share as well. Cash and investments is up substantially and should continue to go up substantially for this company. Shares outstanding in the company are going down. I love that. Future business cost of the company overall is going down, right? Because they're doing these big layoffs and cost reduction coming up here. And innovation for the company is going to likely be on the upward trajectory now that Alex Chris is in and Dan Schulman's out. So overall, the PayPal story, folks, oh boy, this is a great story. This is a great company, and I'm very excited to continue to add shares this one here in the short term. And I think this is going to be a pretty exciting next few years ahead for PayPal overall. And I think the worst is behind this company overall, and I think much brighter days are ahead in regards to PayPal. Okay, so that's PayPal overall. Okay, next up here, 4 stock of these 6 stocks looking to buy February 2024, and that is this stock, Cheesecake Factory. This is easy money stock with big money potential, in my personal opinion. When I say big money potential over the next 5-10 years, I'm talking big money potential. Now, Cheesecake Factory, you probably know it from the very famous Cheesecake Factory restaurant side of the business, right? Super famous in the United States of America. And, even in some international markets now, Cheesecake Factory is starting to be known. But if you live in the United States of America, very famous brand. But this is a way bigger story than just Cheesecake Factory. If all they own was Cheesecake Factory, I would not be in this stock. I'll put it like that. If the only restaurant chain this company owned was Cheesecake Factory, I would not be interested in the stock. I would not own the stock. The reason I own the stock is because it has some ridiculous growth opportunities that no one sees right now. That's outside of the Cheesecake Factory brand. The Cheesecake Factory is just this cash cow that allows a company to invest in these next big chains that are going to become as big or potentially even bigger than the Cheesecake Factory over the coming years, okay? And so when I see the Cheesecake Factory, I see North Italia. North Italia, now this company has many different locations opened up in several different markets now at this point in time. And this is going to be a massive hit in my opinion. This is as big of an opportunity as Cheesecake Factory is overall. North Italia, a little higher end, the way I would put North Italia is, think about the Olive Garden, okay? But think about if the Olive Garden's food was much better quality. The price points were a little more, but the Food was a lot better quality, and on top of that, the ambiance was better. That's North Italia, okay? So, what we're dealing with here is a beast that is opening up into, and if you think about one of the most profitable, best restaurant chains in history, it is Olive Garden, actually. And so Olive Garden's been this amazing restaurant chain and so profitable for a long time and built Darden Restaurants into a beast. And I'm looking at North Italia, I'm like, this is the next Olive Garden, but just, like I said, a little more expensive, better quality, in much more modern, better ambiance than Olive Garden obviously was, right? And so I'm looking at North Italia and I'm like, I see a day when they have 500 locations in the United States of America, 1,000 locations in the United States of America, and many international locations as well over time. Okay, I went to North Italia just very recently in Summerlin. Food's phenomenal. Went there to celebrate the big day of Meta stock going up. Was like, I think I was up $150,000 or something after hours, and I was like, let's go out tonight. And so we went to North Italia. Went to there pretty late too, and it was super busy. As always, food was excellent, phenomenal. Okay, then they own Flower Child concept, which this has huge potential. This is kind of a cross in between a restaurant and like a Chipotle. So the way I would think about this is you go up there, you order your food, you tell them what you want, you pay right there. Okay, they give you a number, then they make it all, and they bring it out to your table. But it's not like a waiter-waitress experience like a North Italia or a Cheesecake Factory, okay? So it's kind of like a fast casual concept in between. The food quality is amazing at Flower Child as well. I was just there yesterday, actually, with my kids. I took two of my kids, not the third one. He's too crazy, okay? My 2-year-old. I took my 9-year-old and 6-year-old to Flower Child. And I thought it'd be interesting to kind of get their opinion on it as well. So I ordered them some chicken and steak and like some mac and cheese and potatoes. It was fascinating because my oldest, he was like loving life. Like he thought this was so amazing, and I was blown away because I didn't really think that was a type of place they would think is that great, and they loved it. Like they were talking about, can't wait to come back in the future and things like that. So that concept has massive opportunity over the coming years, and that place was a zoo as well, by the way. Very, very busy. They got an indoor and outdoor area in regards to that. So Flower Child has big potential. That could be next up. Then they have this Culinary Dropout, okay? I've been to Culinary Dropout in Scottsdale. This place, woo, baby, it is massive. And I can tell you, they've got a few locations now overall. I'm looking at this concept, and I'm like, oh my gosh, this is big. First off, you go there on a Friday night, Saturday, almost any night, you got to wait like probably an hour just to get in. And look, it's huge. It's massive. This is a type of place that drinking goes on. Let's just put it that way. People are going to party. People are going to have drinks. It's not just a place you're going to eat, like a Flower Child is, for instance, right? This is a place where people are going to party, have a good time. And if you know the restaurant business, you know a lot of the money you can make, and especially the profits, comes from the party people, okay? The food, there's only so much money you can make in food. So you sell, somebody a burger and fries for, $15, right? Okay, maybe you make, because after food costs and all those sorts of things, maybe you make $7 off that. All right. If you're talking about now you're selling wine, you're selling mixed drinks, ooh, baby, you're selling beer. Now you're talking about making big money. That's Culinary Dropout. And so they're opening some new locations for this one in different markets. And I'm like, that opportunity is big. Are they going to have 1,000 Culinary Dropouts? Probably not. But could they have 100 Culinary Dropouts in the United States of America? 200? I think something like that. And those will be all huge money makers because people love that and they love to drink there, okay? Then they have this concept. This is a little higher end. This is Olive and Ivy. I've been to this location in Scottsdale as well. Phenomenal service, phenomenal food there, phenomenal vibes. Little smaller opportunity than the others in my personal opinion. Then they have this one, Blanco, which is phenomenal Mexican food concept they have. They have several locations. I've been to a couple of locations now at this point in time in Arizona. Really good as well. So that's a whole opportunity for them. I think that's probably next up after Culinary Dropout. Then they have this one, Doughbird, which is more pizza and rotisserie. has potential. We'll see where that one goes. I think that's a little further down the food chain, we can say, in terms of opportunities there. I've been there as well. Very good. So they own all these different concepts: Flower Child, Flyby, The Henry, Culinary Dropout, Doughbird, Blanco. They own Olive and Ivy, The Greenhouse, Zenburger, The Arrogant Butcher, Wildflower, this one, Pushing Daisies. I haven't been to that one. So, I mean, there's just opportunities all over the place. And so I can tell you, I see several hits coming with this company. Culinary Dropout is, like, in my opinion, in the bag. Huge hit for the company. Flower Child, I'm getting more and more convinced that's a huge opportunity, and they're going to be able to do a lot of locations of that. But North Italia is for sure, like, oh my gosh, like, this is going to 500 to 1,000 locations in the United States and going to go international as well. Like, there's no question, in my opinion, that one's, going to be massive. So if you think about the big dog, the king of the restaurant business for the past 20 years has been a company named Darden Restaurants. And this is a company that was really built on the back of Red Lobster, Olive Garden, Longhorn Steakhouse. Now, they did sell off Red Lobster. They sold that off about a decade ago, back in like 2014, for about $2.1 billion. But the Red Lobster really helped build that company into the beast it was, along with obviously Olive Garden and Longhorn Steakhouse. But Darden's the big dog in the space. And look at this company. They're the kings. They're a market cap of nearly $20 billion, right? $20 billion at this point in time. That's incredible for Darden Restaurants. You look at somebody like a Cake, $1.8 billion. I think Cake's going to be the future king in this space. I can tell you there's a difference between Darden Restaurants, quality, service levels, ambiance, all those sorts of things. And so when I look at it, I think Cake's going to be the future king. I think 10 years from now, we're going to say the Cake became the king of the restaurant business. That's my personal opinion in regards to that, okay? So huge opportunity in regards to Cake here, okay? By the way, also, it's a great dividend payer. It's a 3% plus yield in this one. Now, the other thing I love about Cake is this company's already been through so much. They went through the great financial crisis, made it through to the other side. They went through Rona when their restaurants had to be closed, made it to the other side. They went through the highest inflation we've seen since the 1970s, made it out to the other side. So when I think about I want to own a stock for the next 5, 10, 15, 20 years, whatever, I want to think about companies that they're proven. They've been through it. This company's been through it, and they always make it out to the other side and become a stronger and better company for the future. And so I'm looking at, I think this is one of the most undervalued assets in the entire stock market right now, okay? Now, the company, very inconsistent over the last few years in terms of beating analyst expectations. Now, I think there's a turn coming in terms of this company understanding beating analyst expectations. And I heard it on the last conference call. I believe they sandbagged numbers. And so I believe the management team now understands if we're going to be a respected stock, we have to start playing the game of Wall Street. What is the game of Wall Street? The game of Wall Street is we're going to come in, we're going to beat your analyst expectations, and we're going to do that quarter in and quarter out. And so to do that, you've got to sandbag your guidance a little bit, right? And you've got to also put up the results and come in with good numbers. And so I'm looking at a Cheesecake Factory here that I think is going to start understanding this game. And once they can become a trusted company by Wall Street to come in and start beating EPS and beating revenue quarter in, quarter out, there's going to be a whole change in valuation. All of a sudden, Wall Street's going to say, we're not going to value this like a dog stock at a 10 PE anymore, 10 forward P. We're going to start valuing it at a 20 or 25 forward P because it has the growth, and we know this company's coming in with beats quarter in and quarter out. That's the game of Wall Street. The worst game of Wall Street is you be an inconsistent company that you're missing your EPS, you're missing your revenue quite substantial, quarter in, quarter out. Even if it's small amounts of money, it's still a big difference between, this company's going to miss versus this company's going to beat, okay? Now, they also are building out their third bakery production line, which is, I think something that is going to help the company expand, but also I think ultimately at the end of the day, it's going to bring down cost for the company overall. And when you think about it, they obviously need their baking facilities for in-house products, right? That are sold inside the restaurants, but they also need it for things that are sold inside stores. They sell cheesecake in stores, and, you might go to the grocery store and see their bread sold, right? Which are phenomenal. You might see ice cream related products and things like that. So that's a whole other opportunity for Cheesecake Factory, right? Way too cheap. The stock's trading at 11 times analyst expectations for 2024, which analyst expectations are too low, by the way, in my personal opinion. So way too low considering the future growth ahead for this company overall. And so I look at a Cheesecake Factory here. I need a lot more shares of stock. Right now in the public count so far, I'm up to 1,295 shares. I need like 5,000 plus shares. I think they're going to become the restaurant giant. I think they're going to become the future Darden restaurants. I am 100% convinced. And so I need as many shares as I can possibly get of this big guy. And like I said, I feel so comfortable adding as many shares as I possibly can. And the reason I feel so comfortable is I've already seen this company go through the great financial crisis, shutdowns of all their restaurants during Rona, inflation, all the new wage rules that have been made over the years, especially in California in terms of wages. I've seen them go through it all, and they may always make it out to the other side stronger than ever. So love cake, man. Love this one. Want to continue to add to that one, okay? Number 5 of these 6 stocks looking at February 2024 is Alibaba, the gem of China, but the dog of the big dogs. If I think about some of the biggest companies in the world, and I think about who's the biggest dog of them all in terms of stock performance, it is Alibaba. But I think those days are over, and I think there's much better next 5 years ahead for a stock like Alibaba, okay? Now, when it comes to Alibaba, this is way more than just a massive website, massive app selling to Chinese citizens, okay? If we look at their latest numbers, their traditional business, you think about the website, the app, Taobao, Tmall, then it had about 4% revenue growth year over year, right? Now, look where they're getting a lot of other growth for this company, right? If we look at their international business, that posted 53% growth very recently here. That's insane, right? If we look at their local services group, 16% growth year over year. If we look at their logistics network, 25% growth. Their cloud business has been kind of slacking recently with only 2% growth, but that's going to start coming back to life in 2024 along with every other cloud business, AWS and all the other ones, okay? So I'm not worried about their cloud business at all. I think that growth is going to accelerate massively this year. Digital media and entertainment business, 11% growth there for overall 9% revenue growth. And once again, that's during bad times for Alibaba. So what's it going to be in good times? 15%, 20%, 25%. We're going to get back to much better numbers in the future, okay? Now, also looking at Alibaba here, operating margins that have increased immensely for the company here recently. Non-GAAP EPS that has increased immensely here recently, about 21%. So the profitability story is getting a lot better place, right? Now, also, I thought this was one of the most massive things you could imagine. The company announced a dividend here recently, and I look at this as huge because it's more proof that the company is focused on being shareholder friendly, returning money to shareholders. They're basically saying, we see the stock price, it's in a horrible place. We're going to do things to bring us out of that. Not just we're going to put EPS numbers up, we're going to put revenue numbers up, but we're going to start paying dividends. We're going to buy back shares. We're going to do shareholder friendly things. And I think that's a huge step in the right direction. That's one of the other things that gave me confidence to start adding to the stock now, okay? Now, one of the other things that gave me confidence is for years, China and the U.S.'s relationship has soured. There was a good time period from early 2000s all the way till about 2016, about 2015, 2016, where China and the U.S.'s relationship got better and better and better. It was in a very healthy state. We were like friends. And then after 2016, the relationship got worse and worse and worse and worse. And trade wars and tariffs, and then Rona happened. It was just thing after thing after thing. And the relationship continued to deteriorate until very recently. And when I say very recently, I'm talking in just the past few months. The relationship has went from the worst I've seen in my adult lifetime to starting to get better. Do we have a long way to go here? Yes. But it has started to improve, the relationship. And that's a big step in the right direction when you go from, wow, this is the worst I've ever seen, to now it's starting to improve. Xi coming over to the United States, coming to the mainland for the first time in years. I think it had been 4 or 5 years since Xi had been in the U.S., as big as it can get. And he spent a good amount of time here and met with a lot of politicians, met with a lot of business leaders. That's as big gets when President Xi comes over and spends, immense amount of time in the States, right? Now, these two sides, we realize we need each other. China realizes they need the U.S. U.S. needs China. We need each other for different reasons. The U.S. needs China because we got a lot of debt in the U.S. We all know that. Lord knows that, okay? We need a debt buyer, okay? China can be that. We also need an additional growth driver for our companies, right? Think about Apple. Think about Starbucks. Think about these companies. Think about a Nike. When our companies can do business over in China and China's doing well, right? It gives a bunch of growth for our companies that then they can go and reinvest that back into more jobs in the United States or more other opportunities in general. Our companies become more powerful, better and better. We can generate more money as everything's fine, okay? That's why we need China. There's two key reasons why China needs the United States. One is for investment purposes, to invest into China, right? China needs investment. And guess who's got a lot of money? Guess who's got more money than anybody? The United States and United States companies, right? So China needs U.S. companies to say, we're going to grow in China. We want to build business. We want to do this. We want to do that. We want to build. They need to win resorts to want to build another big project in the future, right? And also China needs U.S. for innovation because U.S. companies are the best at innovating, and that then re-energizes Chinese companies to then copy and do whatever the U.S. companies are doing. So a Starbucks can come into China, show it how it's done, and then a Luckin Coffee can be built, or other coffee chains can be built, right? And Apple can come in and grow their business, and then other Chinese phone manufacturers realize, oh, this is how Apple does it, and they can copy. A Tesla can come into China, and then the Chinese companies, oh, wow, they get all innovative, and they start doing this and doing that and copying and those sorts of things. So both sides need each other. And the relationship's starting to get back closer rather than getting worse now at this point in time, okay? Now, in regards to Alibaba, the value is on the floor. It's silly. It's silly. It's trading at 7.5 forward P on the stock. Come on, okay? Over $10 billion of revenue growth is expected for this company. When you're posting $10 billion of growth expected next year and you're trading at 7.5 forward P, it's just ridiculous. It's a floor valuation on the stock right now. Baba's a buy, in my opinion, all the way to $125. I can't go too heavy in Alibaba, though. And the reason I can't go too heavy is because it is a Chinese company and the relationship could always deteriorate, okay? So that's Alibaba. I really like this one. I'll add to the position. I can't go too crazy on it, okay? Last stock up here, number 6 of 6 is SoFi Technologies. The brand new buy for me up here. SoFi Technologies, just added my first 2,000 shares of the stock and looking to buy a lot more. I don't want to go all into SoFi because I literally just went into SoFi, did a 29-minute and 29-second video, a nearly 30-minute video just on SoFi 3 days ago on the channel. So if you want to hear me talk a lot more about SoFi, click on my channel, go watch that video on SoFi stock. I just started buying now. Here's why, because that dives super in depth into SoFi, okay? I appreciate you joining me here today. I hope you appreciate this video. It was a beast for me to put together, nearly an hour-long video. If you have been gambling your money around the stock market, it's time to take things serious, okay? It's time to learn how this game's actually played. The stakes have gone up now at this point in time. Pin comment down there. Get in my private stock group. Get learning. I've been doing this game for 15 years now. I have so much to teach you in there. And yeah, let's take things up to a higher level. That is pin comment down there. Much love and have a great day.